What is the main role of general insurance in personal and commercial financial planning? A. To generate investment returns. B. To manage and transfer financial risk from the insured to the insurer. C. To increase business profitability. D. To reduce the cost of taxes for individuals and companies. The correct answer is B. To manage and transfer financial risk from the insured to the insurer. Explanation. General insurance allows individuals and businesses to transfer the financial burden of unexpected events like fire, theft, or liability to insurers. By paying a premium, the insured is protected from losses that would otherwise need to be self-funded. Which of the following is an example of a personal lines insurance product? A. Business interruption insurance. B. Marine cargo insurance. C. Home insurance. D. Cyber liability insurance. The correct answer is C. Home insurance. Explanation. Personal lines insurance includes policies meant for individuals rather than businesses. Home insurance protects private dwellings against risks like fire or storm damage and is a common personal insurance product in New Zealand. Who is primarily responsible for assessing risk and setting premiums in the general insurance process? A. Claims officer. B. Insurance broker. C. Underwriter. D. Policyholder. The correct answer is C. Underwriter. Explanation. An underwriter evaluates risks associated with insuring an individual or entity and determines whether the insurer should accept the risk, under what terms, and at what premium. They are central to the pricing and acceptance process. What does the insuring clause in a general insurance policy typically describe? A. The claims history of the insured. B. The list of all policy exclusions. C. The events or losses that are covered by the policy. D. The premium payment schedule. The correct answer is C. The events or losses that are covered by the policy. Explanation. The insuring clause is the core promise of the insurer, stating what risks or perils are covered under the policy. It outlines the conditions under which the insurer will pay a claim. In New Zealand, what is the primary role of a general insurance broker? A. To assess and underwrite risk for the insurer. B. To adjust claims for loss and damage. C. To act as an intermediary representing the policyholder's interests. D. To enforce insurance regulations and monitor compliance. The correct answer is C. To act as an intermediary representing the policyholder's interests. Explanation. A broker helps clients find suitable insurance products by comparing options across multiple insurers. They act on behalf of the client, not the insurer, and assist with risk assessment, quotes, and policy placement. Which of the following would not typically be covered under a standard contents insurance policy? A. Furniture and appliances. B. Personal clothing. C. Office equipment used for business at home. D. Jewelry stored in a home safe. The correct answer is C. Office equipment used for business at home. Explanation. Contents insurance is generally limited to personal household items. Business equipment often requires additional or separate coverage through commercial or business insurance policies. What is a common feature of business interruption insurance? A. It covers physical damage to business assets. B. It replaces lost income during a period when the business cannot operate due to an insured event. C. It covers all theft losses, regardless of circumstance. D. It provides liability protection for employee injury claims. The correct answer is B. It replaces lost income during a period when the business cannot operate due to an insured event. Explanation. Business interruption insurance is designed to compensate the business for lost profits and ongoing expenses, e.g. rent, wages, while operations are halted due to a covered event like fire or flood. Which type of insurance provides protection for professionals against legal claims arising from errors or omissions in their work? A. Public liability insurance. B. Product liability insurance. C. Professional indemnity insurance. D. Business interruption insurance. The correct answer is C. Professional indemnity insurance. Explanation. Professional indemnity insurance protects professionals, e.g. consultants, lawyers, accountants against claims of negligence, breach of duty, or professional misconduct resulting in financial loss to a client. What does the policy schedule in a general insurance contract contain? A. The entire wording of the insurance agreement. B. A list of regulatory authorities. C. The specific details of the insured, sum insured, and period of insurance. D. Definitions of all technical terms used in the policy. The correct answer is C. The specific details of the insured, sum insured, and period of insurance. Explanation. The policy schedule is a personalized section of the insurance policy that outlines the who, what, and when of the coverage, such as the name of the insured, start and end dates, and specific limits of cover. Which of the following is an exclusion commonly found in standard travel insurance policies? A. Trip cancellation due to sudden illness. B. Theft of baggage in transit. C. Medical expenses from accidental injury. D. Claims arising from pre-existing medical conditions not disclosed. The correct answer is D. Claims arising from pre-existing medical conditions not disclosed. Explanation. Most travel insurance policies will exclude coverage for undisclosed pre-existing medical conditions unless the insurer has been notified and agreed to cover them. Failing to disclose such conditions can lead to claim denials. What does sum insured mean in an insurance policy? A. The maximum amount the insurer will pay under the policy. B. The amount paid as an excess in a claim. C. The annual premium of the policy. D. The assessed market value of the insured item. The correct answer is A. The maximum amount the insurer will pay under the policy. Explanation. The sum insured is the limit of the insurer's liability under policy. It represents the maximum payout the insurer will make in the event of claim, subject to policy terms and exclusions. In motor insurance, what does agreed value refer to? A. The current resale value of the vehicle. B. The insurer's estimated repair cost. C. Predetermined amount agreed by the insurer and client at the policy's inception. D. The cost of the vehicle when new. The correct answer is C. A predetermined amount agreed by the insurer and client at the policy's inception. Explanation. Agreed value is set amount negotiated and accepted by both the insurer and the client at the start of the policy. This figure determines the payout in case of total loss, regardless of market fluctuations. What is the purpose of an insurance excess? A. To increase claim amounts for customers. B. To cover legal liability. C. To reduce small claims and share some risk with the insured. D. To cover brokerage fees. The correct answer is C. To reduce small claims and share some risk with the insured. Explanation. The excess is the initial amount the policyholder pays toward a claim. It helps reduce administrative costs by discouraging small claims and ensures the insured shares part of the risk. What typically happens when a policy lapses due to non-payment of premiums? A. The insured receives a partial refund. B. The policy is immediately renewed. C. Coverage ends and no claims can be made. D. The insurer pays any future claims under protest. The correct answer is C. Coverage ends and no claims can be made. Explanation. If a policy lapses due to non-payment, the insured no longer has coverage and the insurer is not obligated to pay for any losses occurring after the lapse. What principle requires full disclosure of all relevant facts by the insured when applying for insurance? A. Principle of indemnity. B. Duty of utmost good faith. C. Proximate cause. D. Principle of contribution. The correct answer is B. Duty of utmost good faith. Explanation. The duty of utmost good faith, ubera mi fide, is fundamental to insurance contracts. It obligates the insured to disclose all material facts so the insurer can accurately assess the risk. What might cause an insurer to apply loading to a policy premium? A. The client has no previous claims. B. The risk is deemed to be higher than normal. C. The client has excellent credit history. D. The insured property is located in a low-risk area. The correct answer is B. The risk is deemed to be higher than normal. Explanation. A loading increases the premium to reflect additional risk, such as a high-risk location, prior claims, or poor driving history. It compensates the insurer for taking on greater exposure. What is the role of a loss adjuster in the claims process? A. To sell new insurance policies. B. To represent the insured during settlement. C. To assess the validity and value of a claim. D. To cancel the policy immediately. The correct answer is C. To assess the validity and value of a claim. Explanation. A loss adjuster is a professional engaged by the insurer to investigate complex or high-value claims, validate facts, and determine appropriate settlement amounts. Which of the following is a red flag for potential insurance fraud? A. A claim involving recent upgrades to property with receipts. B. A claim made shortly after the policy was purchased. C. A claim with clear photographic evidence. D. A claim reported through the proper channels. The correct answer is B. A claim made shortly after the policy was purchased. Explanation. A claim made soon after policy inception can be a red flag, especially if the loss circumstances are suspicious or documentation is lacking. Such timing may indicate pre-existing damage or intent to defraud. Which of the following factors is least likely to influence the premium of a house insurance policy? A. The location of the property. B. The age and condition of the building. C. The homeowner's favorite color. D. The property's security features. The correct answer is C. The homeowner's favorite color. Explanation. Premiums are based on risk assessment. Factors like location, security, and building condition affect the likelihood or severity of a claim. Personal preferences like color are irrelevant. What is typically required when lodging a claim for stolen property? A. A copy of the insured's will. B. Written statement from the bank. C. Proof of ownership and police report. D. Statement from neighbor. The correct answer is C. Proof of ownership and a police report. Explanation. When claiming for theft, insurers usually require evidence of ownership, e.g. receipts, photos, and a police report confirming the incident was officially recorded and investigated. Under the Insurance Law Reform Act 1977, what must an insurer prove to deny? A claim based on non-disclosure. A. That the client did not understand the policy. B. That the non-disclosure materially affected the underwriting decision. C. That the advisor failed to retain the application. D. That the client acted unethically. The correct answer is B. That the non-disclosure materially affected the underwriting decision. Explanation. The Act requires insurers to show that a non-disclosure or misstatement was material, meaning it would have influenced the decision to accept or price the policy. If the non-disclosed information wouldn't have affected the insurer's decision, they cannot deny the claim. Which law prohibits misleading or deceptive conduct in the promotion of insurance products? A. Fair Trading Act 1986. B. Income Tax Act 2007. C. Contract and Commercial Law Act 2017. D. Privacy Act 2020. The correct answer is A. Fair Trading Act 1986. Explanation. The Fair Trading Act 1986 ensures that businesses, including insurers and advisors, do not make misleading or deceptive statements. It applies to all advertising, disclosure documents, and advice given to consumers, protecting them from unfair conduct. The Financial Services Legislation Amendment Act (FSLA) introduced which key change in 2021? A. A single licensing regime for financial advice providers. B. A ban on all product commissions. C. Mandatory tax training for insurance advisors. D. Deregulation of dispute resolution processes. The correct answer is A. A single licensing regime for financial advice providers. Explanation. FSLA established a uniform licensing system for financial advice providers. Replacing the previous tiered structure, it introduced clear accountability and competency standards, with all providers operating under a financial advice provider (FAP) license. What is the primary role of the Insurance and Financial Services Ombudsman? If so, A. Investigating and resolving disputes between consumers and insurers. B. Setting premium benchmarks for insurers. C. Auditing financial advisors annually. D. Drafting policy wordings for general insurers. The correct answer is they investigating and resolving disputes between consumers and insurers. Explanation. The IFSO scheme offers a free, impartial complaint resolution service for individuals who have disputes with their insurer or financial provider. It's an alternative to going through the court system and is designed to be accessible and consumer-focused. When matching an insurance product to a client's needs, what is the most important first step? A. Understanding the client's risk profile and objectives. B. Reviewing competing advisor strategies. C. Researching recent complaints to the IFSA. D. Focusing on the most comprehensive policy available. The correct answer is A. Understanding the client's risk profile and objectives. Explanation. Before recommending any insurance product, an advisor must fully understand the client's financial position, risk tolerance, and coverage needs. This ensures the policy suits their circumstances and aligns with best interest duty obligations. In which scenario should a financial advisor refer the client to a specialist? A. When the advisor is busy with other clients. B. When the client requires legal or taxation advice. C. When the client is undecided on cover levels. D. When the client wants help completing the proposal form. The correct answer is B, when the client requires legal or taxation advice explanation. Financial advisors must operate within their scope of expertise. If a client seeks legal interpretations, taxation advice, or estate planning beyond the advisor's qualification, it is both ethical and required to refer them to qualified specialists ensuring accurate and compliant guidance. Which of the following must be included in policy documentation? A. Marital status of the client. B. A full history of claims from all policyholders. C. Personal opinions from the advisor. D. Insurance schedule and any endorsements. The correct answer is D. Insurance schedule and any endorsements explanation. Key policy documents include the schedule, which outlines specific details like cover amounts and insured assets, and any endorsements which modify or add to the standard terms. These are essential for confirming what coverage applies in the event of a claim. What is the purpose of maintaining accurate insurance proposal forms and declarations? A. To confirm the advisor's authority to advise. B. To allow the insurer to assess risk appropriately. C. To automatically issue financial advice reports. D. To determine retirement planning eligibility. The correct answer is B. To allow the insurer to assess risk appropriately explanation. Insurers rely on accurate proposal forms and declarations to conduct underwriting. These documents help determine the level of risk, the premium, and whether any exclusions apply. Incorrect or incomplete information may invalidate cover or lead to claim denial. What is an advisor's ethical duty when explaining policy to client? A. To promote high-margin policies for profit. B. To ensure the explanation is clear, fair, and not misleading. C. To refer the client to the insurer for explanations. D. To only answer questions that the client asks. The correct answer is B. To ensure the explanation is clear, fair, and not misleading explanation. Advisors are bound by the Code of Professional Conduct to provide information that is accurate, understandable, and balanced. Misrepresenting, omitting key details, or using overly complex terms may confuse clients and breach ethical obligations. What should an advisor do first when receiving a complaint from a client? A. Forward the complaint to the IFSO immediately. B. Offer an alternative product to quiet the client. C. Delete the email and wait for further contact. D. Acknowledge the complaint and follow internal complaints procedures. The correct answer is D. Acknowledge the complaint and follow internal complaints procedures explanation. The first obligation in handling a complaint is to acknowledge it and follow the advisor's internal dispute resolution (IDA) process. This promotes early resolution. If not resolved internally, the client should be advised of their right to escalate to an external body like IFSO.